Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a quick look at Mbox, and just before we do, peek over at Bitcoin, kind of see what's going on, because I think it's important for you to kind of just know what's up, right? So we're kind of just trending right around 57,000. The price has been up and down, roughly 5%. From bottom to top every 12 hours. So just get ready for some shifting there. But if we can consolidate a little bit more smoothly, we're going to see a lot of altcoins take off. Mbox is obviously an exception. We'll look at that too. But generally speaking, Bitcoin's in good shape there, all things considered. We're above the 50-day simple moving average, and we have a resistance level right around 61,000 with the 200-day lagging behind. Let's go ahead and take a look at Mbox. And just before we do, not a financial advisor. I just love teaching people how to trade. I've been trading for over 15 years. And my goal is to help you become a better, more effective, self-sufficient trader. I have a trading group designed for that specific purpose. Check that out, link in the description below. We actually have more slots available tomorrow or in 5 hours after this posting, right? So check that out, of course. December 1st is open enrollment. Now, looking at Mbox, let's go ahead and take a look at the one-day chart and work our way down. Obviously, we had a significantly large candle yesterday. We can see here it was about 100 and almost 10% from bottom to top in a 24-hour period. Obviously, the last 2 hours, 2.5 hours, we've seen the price still increase. That's a very, very good sign. So we like to see that. We can see also too, we had a previous high right around 1080, and that has since been broken. So all good things here for Mbox, obviously. We want to see what else we can disseminate. We can obviously see also that the RSI is well over 70. That's pretty standard. And then, of course, MACD is just shooting straight up. That's pretty standard as well. So instead of a bearish divergence, just shot right up and bounced off this support level somewhere around 596. So all good things there for Mbox. Obviously, there's nothing bearish here, of course, except for the fact that it does appear just at a bird's eye view that this is overextended. Overextended coins have a tendency of retracing about 50% of their original starting point. And just taking a look at this here, if you kind of fast forward or look big picture again, you can see that this is almost 50% of the way in which it's increased, right? So if there's a chance to consolidate, it's going to probably consolidate closer to about 1085 as a rough estimate. So we'll take a look at the Fibonacci retracement lines here in a moment. But for right now, we're above both moving averages. RSI is up over 70, and I don't typically love RSI over 70 on a 4-hour chart. Check out my RSI video, of course, if you want more information on how to kind of properly utilize that. But generally speaking, the common rule of thumb is to not sell when the price just comes up over 70, because yes, it's considered overbought, but it still hasn't had a chance to finish its momentum play, so to speak. The key takeaway is to kind of consider taking profits when the price is starting to come back down closer to 70 on the RSI. Right? Bear in mind, different time frames provide different results, but the 4-hour time frame is probably the most reliable for that example. All right, so that's kind of where we're at there for the 4-hour chart. One last thing I want to take a quick look at here is TD Sequential. And we can see we got a reset. We got a 9 that reset down because there was enough consolidation here to effectively increase. So we're at a 4. So hypothetically, again, this is strictly hypothetical, we have a potential of 5 more 4-hour candlesticks, roughly 20 hours left of bullish momentum, that this could continue, okay? Because again, if you look at this here, you can see from a 1 up to a 9, then it has to come back down, right? Because it's at that state of exhaustion. We're at a 4 right now. That gives you any idea, right? Therefore, there is a good chance we might see a good half to a full trading day left of bullish momentum, just based on that sentiment alone. That's not an only reason to make a decision, but that factors in to the overall sense of this analysis, right? Because that's what you want to do. A good analysis is going to look at top to bottom, compare Bitcoin. Bitcoin isn't really relevant right now, obviously, but that's also typically important to identify. And then just generally understanding what each time frame is telling you. So both the 4-hour and the 1-day tells us we have more gas left in the tank, and for it to effectively continue upwards. Take a look here. We're just going to jump right into TD Sequential again. We're a bit overextended here. This is where it kind of gets tricky. The 1-hour candlesticks are basically telling us, hey, we've got a 9 a long time ago, and the price still continues. 1, 2, 3, 4, 5 candlesticks in, we still have this momentous trend. And what should normally happen is the price should essentially go sideways here or typically retrace. It hasn't happened yet. So just bear that in mind. That is an interesting fact. And what I'm going to do here before we get a little too much further is I'm going to just go ahead and mark this as a, let's go ahead and mark this previous resistance level and see if that ties up in Fibonacci retracement at all. Sometimes it does, sometimes it doesn't, but generally speaking, we're going to go ahead and want to look at that. And we're just going to go with, let's go with the 4-hour charts, find the lowest, most recent point, and go there. All right, so that all-time high is pretty darn close to $11.18. So Fibonacci retracement basically telling us 11.18 is a pretty strong support level. So between 10.12 and 11.18, you could just say round numbers, $10 to $11. You're looking at a pretty strong support channel. Okay, so that is essentially the support channel right here. So the price continues to recede and it comes back down because it's at a state of exhaustion on the 1-hour chart. It'll come down to this zone. All right, that's generally what we're looking at. Now, looking at the 1-hour chart, let's go ahead and identify the Ichimoku cloud and kind of see what's going on here. This is very good, actually, because if you look at this here, first of all, price action is above the cloud. That would have been an excellent consideration to take entry. Obviously, hindsight's 2020, easy to identify now, but yesterday at about 3 a.m. when I was sleeping, that would have been a great time to get in, right? And the reason why is because the price is, the conversion line's above the baseline, and the lagging span was trailing behind. You can see the same thing here as well. Lagging span has plenty of room to intersect with the price action. So we got a long time before you want to consider exiting your position if you have one open. So hold on to your position. We're all good. The cloud is basically telling us we have green check marks across the board because look at this. Conversion lines above the baseline. Also fantastic. The only time in which we want to be concerned and maybe consider trimming our position, obviously depending on if you're holding on for dear life, if you're swing trading or day trading, those all factor in. But we want to wait for this price, basically this conversion line, to intersect with the baseline. All right, and if you don't know what I'm talking about, first of all, this is the Ichimoku cloud. There is a baseline, which is essentially the lower lagging. Basically, it's a slower moving average, essentially. Then we have the conversion line that intersects with it. It's very similar to a MACD convergence. It's just placed on the price action concurrent with the cloud, and it's actually much more reliable for, again, shorter time frames. You don't want to use this on the 1 day or the 1 week, but 1 hour, 4 hours is adequate. Okay, so that's basically what it's telling us now. So that is fantastic to see that. That basically just tells us we have more potential. So, minus the overextension on the 1-hour chart, which could be resolved by a quick 4 to 8 hour consolidation period right here at this resistance, that would be everything else looks fantastic. That, in other words, that's the only thing that's concerning me is just the fact that we're a bit on the overextended side here, again with TD Sequential. So what we could see happen is the price kind of consolidate and start to work its way up. We could see an ascending wedge pattern where the price trends upward and essentially breaks to the upside once it hits that point. Okay. Now, there's no guarantees that'll happen, but we have every single possible technical indicator pretty much telling us that we're in a bullish trend. It shouldn't stop based on the big picture, but the very small picture, just say the 1-hour chart, is the only time frame that kind of gives us an indication that we might see a slight turnaround or correction in the scenario. So let's go with best and worst case scenario, right? Worst case scenario, price comes back down and starts to relax between 10 and 11.20. That's a worst case, right? It'll probably just relax just above that and just say 11.20 or higher. But if that were to happen, all good. You can add to your position, right? If the price continues higher from here, worst case scenario for this is the fact that the price could very well reach somewhere in the range of $23 in the next 4 trading days. Again, extremely liberal. That's not who I am. I don't like to, hype things up. But based on the metrics and everything we see here so far, there's no reason why it can't reach that. So I would just recommend maybe dollar cost averaging. Don't put your entire bag in right now because there's no guarantees. But consider 3 profit targets, trailing stop loss, trailing take profit percentage, things that are built into the trading community that I have. Check that out in your own time, of course, but I do recommend trading bots for that reason because not a lot of exchanges facilitate those type of healthy entry points or entry targets rather. And you need to make sure that when you get into a trade, you don't just jump in arbitrarily. You have a game plan and you execute that game plan. That's risk tolerance. That's what defines a trader because otherwise you're just strictly gambling. And we don't gamble when we trade our money, right? It's hard-earned money. I'm sure you worked hard for it at one point. And it's important to make sure you protect that investment. Either way, enough of the soapbox. That's essentially the summarization here. Hope you found benefit. If you do, like and subscribe. If not, that's okay too. Consider joining my Patreon community, and we'll look forward to seeing you in the next video. Have a great rest of your day. Take care.